Welcome to interest.co.nz's morning briefing of what's news here and around the world. Everything you need to start the day in 90 seconds at 9 o'clock, starting now, with news overnight of more credit crunch trouble in the shadowy world of hedge funds. Drake Capital Management shut its biggest hedge fund, while another hedge fund, GO Capital Asset Management, closed one of its funds to cash withdrawals. This all follows the surprise move, which we reported on first on interest.co.nz, that ING NZ had shut two of its funds to withdrawals after a run on those funds. Both of those funds invested in collateralized debt obligations and collateralized loan obligations. These so-called CDOs and CLOs are now shorthand for toxic bonds. Meanwhile, after initial euphoria, investors are now having second thoughts about the Federal Reserve's move to pump $200 billion of liquidity into the markets. They are wondering if it is enough to calm nerves in the market. It's one to watch because more nervous markets mean higher interest rates for us and in the short term, a lower currency. And finally, news from home that house prices fell again in February. They're now down more than 4% from their peak in November. And the Real Estate Agents Institute is now worried about annual price deflation and has warned the government of the economic and political fallout from falling prices. That was 90 seconds at 9 o'clock. I'm Bernard Hickey for interest.co.nz.